Hello and good afternoon, everyone. Welcome to the Final Bar. Today on the show, happy birthday to Bitcoin, the 11th birthday for from the original posting of the paper that launched Bitcoin, and we'll break that down. Also open up the Final Bar Mailbag, talk about the XLF, the financial sector, also unpack some cap themes and some scanning ideas. We'll also hit on shifting stocks today. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Good afternoon. Welcome to today's show, The Final Bar. Appreciate you joining us today and every weekday on StockCharts TV here. Quite the volatile day. A little bit of a rally leading into the close, with the S&P finishing down just under 1/3% lower, with some other indexes even further down. Certainly more of a defensive theme with utilities again at the top of the list. Things like financials, industrials, materials down at the bottom of the list. So, sort of the yin and yang right now of the strength of Facebook, of Apple earnings, both, sort of positive news from both sides, but then comparing that with the trade ideas, the trade themes weighing on the tape. So overall, it's sort of that balance, and that's why the market has felt choppy sideways and indecisive. We'll unpack a lot of that. Before we get there, just want to remind everyone, so I'll be down in Las Vegas next week. It's a week from today. I'll be speaking on Friday evening. This is November 7th through 9th. Down at Bally's, and I'll be speaking on the 5 modes of mindful investors, talking about some behavioral biases that can get in the way of some of your investment decisions, how to use charts and as a way to inject more discipline and build better habits to help you make better decisions. So hope to see you there. There's a website on the screen that can help direct you to where you need to go to get more information. So, with today, a lot of people have asked, we're going to open the mailbag a little later, but a number of people have asked just with all the news flow, right? So we have the Fed this week, yesterday. We have so much earnings. So now all the FANG stocks essentially reported in the last 2 weeks, finishing with Facebook and Apple. We have, election themes and challenges and debates. We have China trade issues and how they resolve. In the end, I would remind everyone the key to all of this, and the reason why the charts are such a good place to be right now, is because that's what can help center you. That can help get away from all the noise. A lot of it is just noise. It's a lot of speculation, a lot of wondering what could happen. Charts tell you what has happened, right? You can't restate price, as my friend and mentor Ralph Acampora has said oftentimes, right? That price is fact. Price happened, shares changed hands at a certain level. So analyzing those trends in price has been shown academically to help you understand what's coming next. There's proof that adds value over the long term. So congratulations on getting to this point, recognizing that and trying to better yourself and become a better chart analyst, better investor, and I certainly wish you well. So let's look at today and let's see how it fits into the big picture. Again, the goal with this show is to look at the short-term dynamics, but then relate them to the big picture themes. So what we've had this week, right? At the end of last week, we sort of broke to a new closing high. We then had this choppy 3 days now, and earlier today, went well below that previous resistance, came back, closed about midway of the way through today's range. So overall, a little bit of distribution as a whole during the day, with closing lower than the open, similar sort of range to what we saw yesterday. So no real increase or decrease in volatility, kind of a similar thing. So overall, it feels a lot like a market that has broken to new highs and then quickly stalled. And so, again, the question with this and the reason why there's a lot of discussion is, was that the beginning? And now we take the pause that refreshes and continue higher with the next big leg higher. And that's what a number of my guests honestly have been talking about. Tony Dwyer comes to mind yesterday, very bullish long-term, just based on the structural significance, the third rate cut, and how the markets tend to do around those announcements and so forth. But again, in the end, it's all about price and can we continue? And as much as everyone wants to say all clear, we're now long and strong, there are plenty of issues underneath the hood. Let's look at the dashboard today. And this is something we've talked about a number of times, right? Utilities at the top of the list. And I tweeted out a chart a little earlier, just looking at the XLU and recognizing again, pushing to new highs. It just looks like a really good chart. And the fact that utilities are going higher by on its own is not a bad thing, right? In a bull phase, pretty much everything should be going up to some degree. Even more defensive stuff, it's all going to go up, but it's all about the leadership and the laggardship. And I don't like the fact that utilities are leading on, in a time when you'd expect like a step on the accelerator, push higher with a lot of the higher beta, more speculative, juicier stuff pushing the way up. And that's not really what we've seen here, certainly today. So utilities, the XLU, sort of the big winner out of the 11 sectors. Down at the bottom, you have materials. Interestingly, gold stocks doing pretty well. We'll look at the maybe the Huey or the XAU maybe in a minute to sort of highlight that. But materials as a group on the weaker side, also industrials, and then financials. And the XLF, the chart of the XLF is one we've referred to a number of times, just thinking about what it would take to kind of push through to a new area of resistance. This is the chart of the XLF, and on the 2-year chart, we've hit this resistance level a number of times, just sort of testing, can we break to new highs? Can this momentum continue further up? And again, it's just sort of stalled since we had it. But again, this is just one day among many, and it's all about stringing together these daily moves and seeing how the trends evolve over longer periods of time. So let's certainly keep that in mind here. Communication services number 2, and obviously you've had a lot of earnings releases. When I think about some of the stocks that have moved around in our shifting stock segment, we're going to look at a little more deeply about some of those. But something like Facebook comes to mind. And it's good to just see what stocks are doing around earnings, especially companies that are, sort of surprising to the upside and downside, seeing what sort of price follow through, and do we get through any significant levels. What's interesting on the chart of Facebook is you have the big move today after this announcement, but then look at what's happened during the trading day. It's similar to the chart of the S&P where you have this distribution day. So, a nice gap up, which is good, but not a lot of follow through during the day today, right? More of a distribution. And that's why it's sort of that balance of good news from Facebook, but weighing a lot of other things weighing on the overall equity markets. So that's, I think, what you're sort of seeing reflected here. Compare that to a chart of Apple, and there's a really low tick on here, which might have been a bad tick. I'm not sure. I'll have to look at that. But overall, closed above the open, closed again almost to another new closing high. So much more resilient, holding up there pretty well. And obviously shrugging off, issues with weaker iPhone sales and other things. Overall, the stock seems to be holding up pretty well there. This is the chart of the XLU I wanted to hit on, and we've looked at this recently. I think what strikes me is this is, again, if you cover up the ticker and just look at the chart, overall, is this the type of chart that you would want to own or not? And, I don't know about you, but looking at this, it's a nice, strong uptrend. We've had a recent pullback. We bounced off support, which also lined up with the 50-day moving average, and now sort of resolving back to the upside. It's sort of like it seems like a pretty good entry point within a longer-term trend, and a close above 65, sort of a validation of a breakout to the upside. All of a sudden, it looks like a really good chart. And again, if that's what something like the XLU looks like relative to other sectors that are not quite breaking out yet, I think that's a little bit of an area for concern on there. Just to wrap up the market summary, as always, remind you to look at the Scooter reports. We're going to talk about it in a little bit more as part of our shifting stocks segment. But I would point out a number of the materials groups down a lot. Coal stocks is kind of a lighter group within the S&P within energy, but down significantly over the last couple of days. Where some of the other materials names or groups are down here as well. There's the industry summary page. It's a really good place to sort of hone in on that as well if you're not familiar with it. So that's our market recap for today. Obviously, a lot of movement overall, weaker over stronger, but a nice rally over the last hour. So we'll have to see if that's a sign of impending strength going in tomorrow, or if that was just a covering of sorts before we continue a little bit weaker tomorrow. So today is actually the 11th birthday for Bitcoin, and we talked inside the firm here about how to sort of recognize Bitcoin, and again, the original paper from Nakamoto-san, whoever this mystery person is, was posted 11 years ago today, actually posted to a message board, and that's what sort of turned into the Bitcoin phenomenon that we've followed since then. So this is actually accessible on bitcoin.org if you've not read the initial paper. It's actually a super quick read. It's 9 pages. You think about how much of a difference those 9 pages made for so many people, especially new investors coming in, that this is their introduction to investing. I think a lot of them is looking at Bitcoin, looking at cryptocurrencies. So I did want to just look at some of the long-term charts, just think about it from a long-term perspective. And again, I think, for most of us on the show today, more long-term oriented, thinking about the big picture, thinking about your personal investments, your asset allocation, and then stock picking and rotation within different themes that you can capitalize on using the chart. So let's think about how the chart of Bitcoin should fit into your perspective. So number one, I would point out that if you're not looking at charts of cryptocurrencies, it's a really good idea, only because this is an area where there's obviously a growing and essentially large audience thinking about these as potential long-term investments, but also a lot of speculation, a lot of short-term. The challenge, but also the opportunity with something like Bitcoin is that there's very little fundamental data to speak of, right? You can't value a cryptocurrency really well based on the classical fundamental techniques of supply and demand and something like that would be generally reported, because it's something very different. We're going to sit down next week with a number of people. One is Tom Lee from Fundstrat. When we go to the Las Vegas Traders Expo, sort of get his thinking. He's published a lot of things about Bitcoin, has presented a lot. So we're going to pick his brain a little bit, and maybe we can help fill in the blanks when we come back from that trip. But overall, this is what the long-term chart looks like. This is going back the last 5 years on Bitcoin. And again, if you haven't brought this up on StockCharts, it's just $BTC/USD. That's the Bitcoin to US dollar ratio. It's the main thing that people would be looking at. And what's funny about this, those of you that have looked at a lot of charts, and I think that describes many of you, I first caught myself during 2017 when this thing just started rallying aggressively, is this exponential rise. I immediately looked to the right and thought, okay, I forgot to switch it to log scale. I need to adjust the setting, because this is how the S&P looks if you look at a longer term chart on an arithmetic scale, because the price accelerates as the percent changes get bigger and bigger. The funny thing is, this already is on a log scale. So this is on an exponentially scaled chart, and you can see that it even goes exponentially higher by that measure. So the rise of this chart is beyond anything you've seen if you're used to looking at equity charts. And that's why it's very much, I excuse the pun, uncharted territory in terms of how you can try to understand these and value them from a visual perspective. So to orient you, this is the low in 2015, just below 250. It rallied up to almost 20,000 Bitcoin to dollar at the top, and that's $20,000 per Bitcoin essentially. And then if you can see then the reversal. So 20,000 down to 3,200 is a significant drop. That's a huge, huge loss. You can see how it actually became oversold on the weekly chart for the first time since 2015, right about there. Would have been a very good time to be watching that. So a couple observations now. Clearly, we're in this huge range from 3,200 up to 20,000. When we rallied, we got up to about 14,000, and now sort of within this range. We're going to look at some daily charts in a second, but I did want to highlight the phenomenon that markets can become overbought and stay overbought for a long period of time. So just because something becomes overbought does not mean that that's it. That just means it's gone up a lot. And with something like cryptocurrencies, you certainly want to be aware of that. I would make one other point here. This is the weekly PPO, has not quite turned positive yet, even though Bitcoin has pulled back a little bit in his rally just in the last week or so. So that's maybe worth watching to see if that sort of intermediate term trend turns higher. Here's a daily chart of Bitcoin for the last 2 years, and I bring this up to highlight the Fibonacci retracement. So if you take the high from the end of 2017, line that up with the low from the end of 2018, you can see we came back up to right at 61.8%. We retraced that amount back higher. So huge sell-off, but a respectable and maybe recognizable rally. We then found support a number of times at the 38.2% level. Now I've kind of recalibrated, broke out of that framework. So now if I go to the last 1 year and just look at the low from the end of 2018, take it to that high that we had in June, you can see we once again pulled back 61.8% of the way back down, finding support around 72.50. We've now come back up to that 61.8% range, which is right about at 10,000. So if we've talked before about big round numbers, how significant they can be psychologically. And I would tell you on something like Bitcoin, a lot of people are keying in on that level. I would argue that's one of the reasons why when it jumped so quickly above, it quickly came down, because that's when people decide whether or not it's worth more than that. At this point, it's gone below. So at this point, we're in that middle range, right? One of two things will happen. Either we break above 10,000, and that is a signal of further momentum, or we break down through these moving averages on the way down to something like 72.50. And that's what I would be looking for right now, where we're at relative to those potential support and resistance levels. So that is a quick visual run through Bitcoin. Again, the ticker is $BTCUSD. This is the first of a number of cryptocurrencies we will be adding to the StockCharts platform in the coming weeks and months. So I'd encourage you to pay attention. We'll certainly be sharing the news here on StockCharts TV. We're going to take a brief commercial break. We'll be back opening up the Final Bar Mailbag. See you in a minute.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.
Hey everyone, welcome back to the show, The Final Bar. This is Dave Keller, your host. Really appreciate you joining us. And again, we're going to open up the Final Bar Mailbag. We really appreciate your questions, your feedback. You can get to us two ways. The Final Bar at StockCharts.com. The second way is on Twitter at Final Bar SCTV, or just put questions in the chat room during the show here today. We review all of those things, and the questions that we think would be most helpful on air, we'll share here and go through them. So I just wanted to touch on three questions, if I could, really quickly. The first one, we've talked about the XLF a lot, the financial sector ETF. This is the chart that I've shared a number of times, showing this resistance range from around 28.25 to 29, depending on how you lay it out here, showing this range. This is where we've topped out a number of times, and we've had a little bit of a false breakout where we finally closed above that range, came back down within it. So I'm looking to see if we can, really complete follow through to the upside, and a strengthened financials, I think, would be a really good signal for the overall equity markets. But the question in particular was, with our guest Tony Dwyer talking about the Fed decision this week. This is the third straight rate cut, and hints that might be it for now. What does that mean for banks, and in particular, what is that? How do banks relate to the XLF? Right, when I'm seeing the XLF do something, what would actually cause that, and how do we break down something like the XLF in more detail? So that's sort of a broad question. I'll try to answer a number of the things. So number one, something like J.P. Morgan reports earnings, and how much can you attribute the move of JPM to just that specific stock doing well versus the overall market? And I would say with something like earnings, there's always the question of how a stock moves around the earnings date. And that's a whole set of analytical tools. Tom Boley, one of our fellow contributors, certainly comes to mind as one of the best at understanding that dynamic. But I would say from a longer term, remember that stocks a lot of times will move in complement to one another. So if one bank reports very well, that might be an indication that others will report well. And so they all kind of go up as a sort of a sympathy vote for a specific group. But how do the banks in general relate to the XLF? Well, if you look a level down on the XLF, the financial sector ETF, does anyone know what the biggest weight in the XLF is? It is actually Berkshire Hathaway at about almost 13% of the XLF is Berkshire Hathaway. And you could argue it's not necessarily a bank by far. I mean, it's more of a diversified financial play, but has a lot of industrial, a lot of other sort of in technology, a lot of implications with there. So it's not purely a financial stock, I would say. The second weight is JP Morgan Chase, which is about 12%. So it's the largest bank out of them. The next group of stocks are all banks. It's Bank of America, Wells Fargo, Citigroup, US Bancorp. So from JP Morgan down to US Bancorp, that's a good, 35% of the index. So you have Berkshire at 13%, another 35% of those five banks. And that's why when we see JP Morgan moving, we know that's going to be a big impact on the XLF because of the big weight. So some of those other things, like some of the regional banks, some of the exchanges like CME Group and others are significant. Those are interesting stories, but they're not big enough to really drive the XLF individually. So that's why we tend to pay attention a lot to the banks. And that's why I'll tend to refer to the bank index and think of it that way. So that's sort of the story of how it is. And again, if you're not familiar with something like the weightings, if you go to the industry summary page, you'll see under financials a lot of different groups. We really don't make the weights very clear. It's sort of a separate way of thinking of it. But the banks, this group at the bottom, if you're going to look at one group, that's the one that others, other than any other, are going to have a potential huge drive on the performance of the XLF as a whole. So thanks so much for that question. Really appreciate it. Second one was on the relationship of large to mid to small cap stocks and how that relates to the market. And the question was, I think it was yesterday, the market moved to a certain degree. So today, for example, we have the S&P 100 down 0.1%. We have, sorry, just resorting it here. We have the S&P 100, down 0.1%, mid caps down 0.7, small caps down 1.1. Does that tell you that the market's going lower because the higher beta, more speculative, smaller companies are down at the bottom of the list? I would hesitate to draw a conclusion based on one day, and that's what the question was kind of getting to. This on its own in a vacuum, yes, suggests that there's more weakness during the day on small and mid caps, but there are a lot of things that can cause that to happen. What I'm more concerned at is stringing those days into multiple days, multiple weeks, multiple cycles, understanding that rotation from large cap to mid cap to small cap. So rather than just looking at today's trading, I'd be looking for some comparative charts that help you understand how different cap tiers are doing relative to one another. So this one comes to mind. This is just a quick performance chart looking at the S&P, the mid cap, small cap, and micro cap indexes, and looking at how they're moving relative to one another. So I'm interested in seeing our groups or our market cap tiers making new highs or lows on a closing basis relative to the S&P 500. So for example, here you have the S&P above its closing high from the end of July, whereas something in green, the small cap index, has also done that, but mid caps have not. So seeing that lack of confirmation, I would argue, more helpful than just looking at one day's trading. But again, one day is the beginning of a potential signal, and that trend day over day over day, similar to what we talked about, like with utilities leading on certain days. I think that's what's most important. So thanks so much for that question. Third question I just want to touch on really quick was on scans. We don't have enough time to really dig into the weeds on scanning, but the question was, how can you use scans to capture what's moving and what's actionable, sort of what's happening out there? I will share you two very quick scans that I like to use. On my members dashboard, I'm going to go to the scans page. You'll see some of the scans that I have on here. I run this all the time. This is the S&P 500 13-week highs and 13-week lows. I'm going to run the scan just very quickly so you can see what I'm doing. And here, what I like to do is sort it by sector. So I immediately just click on the sector tab, and then you see which names by sector are grouping. And what I'm doing is glancing at the industry. So here I can see out of all consumer discretionary, the only things up to new 13-week high today are auto parts names, BorgWarner, LKQ, and then I can go down. These are just S&P 500 names. You could use other groups that you want, but I see a couple biotech names in here. I see Bristol Myers. And by seeing which tickers emerge, that's where you might want to click through, look at the charts in a little more detail and understand them. So one scan that I use is a 13-week high scan, and it's very simple. It's just say today's close is higher than yesterday's 65-day max closing price, and the group is the S&P 500. The other thing I use, and then we're going to move on to our next segment here, is the scooter reports. The scooter reports essentially are a scan based on price movements. And if you look at nothing else to understand what's working and what isn't, I would encourage you to look at something like this. And the way that I use it, you've seen, I look at the top 10 overall, which names are at the top of the list. I look at the large cap leaders and the small cap leaders today. What's really moving? At the end of the week, as a quick thing, and then my producer is going to force me literally to go on to the next thing, is to go to the scooter reports, and you can actually do switch it to a 1 week change. This is what I like to run on Friday or over the weekend to see what's really changed over that period. And if you sort by the change column, you can really understand week to week what sort of movements you have. That's a really cool screen. Hopefully we'll do a little deeper dive on that in a future segment. So thanks so much for those questions. Again, please hit them anytime they come to your mind. Just shoot them over email, and we'll make sure we get to some of the best ones on the air here. The next segment today is shifting stocks. What we love to do is think about the equity universe. We talk a lot about the top-down and the markets, the market caps, the sectors. But what about the bottom-up perspective, really thinking about what names are moving and why? So thinking about stock shifting around in this sort of week, it's a lot about earnings. So we talked about Facebook, we talked about Apple, and just going back very quickly to the Apple chart. So, this is a name, for example, that pretty good earnings day and, a nice bump higher, nice jump, a nice close above the open, potentially threatening a new closing high. Didn't quite get there. But remember, around earnings, there's also a lot of peripheral movements that you'll see. So this is CRUS, Cirrus Logic, and that there's a lot of dependency there on Apple. It's a supplier. And so, in semiconductors, something like this jumping big time, basically betting on the upside of Cirrus relative to what Apple's able to say. So what's interesting on a stock like this is it's gone into uncharted territory, right? And a lot of times I'll get questions on what if something goes to new highs? Because I always coach you, start where we're at and look left on the chart. But what if there's nothing there? What if we're at sort of all-time highs? There are a number of different techniques to try to project where things are going. But to be honest, when something like this happens, I definitely switch into more trend following mode. I'm less trying to call a price level at which I think it'll top out. I'm much more interested in staying with the trend that's working and sticking with a consistent uptrend. And so this arguably nice move, nice follow through. Potentially we saw a similar thing here at the beginning of August. That ended up being the high up until today. I mean, you saw the jump and then we were out. And that's why I always talk to you about follow through. What's the follow through tomorrow? That's a really key day after a huge move like this, as investors kind of digest those gains and see where they want it to be. But I would also point out the fact that it's extremely overbought. And in general, when an RSI gets above 80, that tells you the momentum has been so strong to the upside. You'd expect a little bit of a pullback for sure, but mostly, all else being equal, expect a little bit of a continuation to further highs to sort of continue on there. So Cirrus is an interesting chart related to what we saw from Apple. Other names, and you'll see a lot of jumps this week, obviously a lot of gaps on the chart related to earnings. This is an interesting one, right? So Kraft Heinz, a jump higher, a gap up above 30, which is where we had resistance back here last month. So really changing the look of the chart. Above the 200-day for the first time since I don't know where, but well off the visible area here. We're now right at resistance. So we've hit resistance before around 33. We're right now into that range, and that is a huge congestion area. We've talked with the XLF and other places at congestion range, that resistance level that we may be unable to get above. That's kind of where we're at right now with this chart. Thinking about Kraft Heinz. So KHC is another interesting one to pay attention to. And again, this one more look left on the chart and pay attention to where we're at relative to where we've been. That's all the time we have for shifting stocks. And again, the Scooter reports are a really good place to start to pick apart some of the themes, start to pick apart some of the ideas that you may want to pay attention to. So we now have time for the 3 and 3. As you know, at the end of every daily show, we like to hit 3 charts in 3 minutes and tell you the charts that you should be familiar with. If these aren't on your radar, they certainly should be by now. I'm going to start with this chart of the S&P 500. This is a weekly chart. We've shown this recently and also included it as part of the 3 and 3. The point of this is a very long-term chart. It's a reminder, as always, to stay focused on the long-term trends. So this is a weekly chart, weekly exponential moving averages. What's key here is the weekly PPO, also known the weekly MACD, very, very similar, potentially giving a buy signal. The reason why this is important is if we finish the week tomorrow, if we finish up in around this range, that would validate a buy signal, which would be more telling you that the cyclical, the short-term trend confirmed higher, giving you potential upside for stocks there. The second chart as part of the 3 and 3 is this one. This is the S&P 500 with new highs and new lows. We've looked at this one again before, but this one, in this case, we're looking at new highs on the NYSE and new highs on the S&P 500. We highlighted this last month because we had this divergence of the market pushing higher, but less and less new highs. We can see that picture's changed, and a lot of people, including me, have talked about weaker breadth and how that can be potentially concerning. I think this chart maybe could reassure you a little bit that things are holding up very well. We talked yesterday about the advanced decliners and all 3 major cap tiers all breaking to new highs now, breaking above resistance. Now we have a successive series of new highs as we go higher, potentially sloping lower, but boy, there's 27 stocks a day making a new high. You've got to feel pretty good about that. So that's sort of chart number 2. The third chart is the daily chart of Apple. And the reason is because, again, I hesitate to draw broad conclusions based on one stock's earnings, but I like to focus on the big names. This is a big benchmark name. Any institution that is benching to the S&P 500 has to have a strong position, or at least a strong opinion about whether or not they want to be an Apple. And as a stock like this would go higher, if this pushes higher from here, and this is the beginning of a much further upside, if we confirm a break to new highs, any institutional investors that are not here will have to get here very quickly, because otherwise they will be digging a performance hole if they're not in a stock like Apple or a stock like Facebook if it recovers and goes to new highs. So those are your 3 and 3 stocks for charts for today. And again, encourage you to save those to your own chart lists and keep an eye on them going forward. That's our show for today, The Final Bar. Really appreciate you joining us on this Halloween edition on October 31st, 2019. Please send any questions or feedback to us, thefinalbar@stockcharts.com, or get to us on Twitter @FinalBarSCTV. Hope to see you in Las Vegas next week. And from Redmond, Washington, this is Dave Keller. Thank you very much.